Hey, what's going on, you guys? I want to welcome you back to my channel. And in this video, I'm going to show you guys another option that you can actually add to your portfolio as far as trading. So a lot of us, we're in the Forex space, okay? But we understand that about 6 or 7 months ago, the Forex space had a nice shaking up, okay? Especially when MT4 kind of left the market. And when a lot of prop firms started going under because of scams and all of that type of thing. So I'm going to present you guys with another option that you can add to your portfolio. But one of the benefits about this is, number one, it's regulated. So when you're dealing with regulations and things like that, you want to make sure that the brokers that you're dealing with is regulated, because you want your money to be insured and also protected. Now, when we had that Forex shift, a lot of traders start moving over to the futures market. Okay. However, those who are just getting into the Forex space, they weren't quite ready for that jump. Dealing with futures is a different type of situation. You're not necessarily dealing with pips, you're dealing with ticks, and you have to deal with contracts. So it's a nice learning curve that you have to learn. But a lot of us, not really ready to take that jump. We're going to deal with futures and all of that type of thing in later videos, okay? But in this video, we're going to talk about an option that is called Nadex Knockouts. Now, Nadex Knockouts is almost kind of like a big brother or step brother to binary options. Some of us don't really know about that as well. I'm going to present that in another video as well. Now, in this particular video, I'm going to give you guys a couple options, but I'm going to also provide you guys with a strategy that you can literally use specifically to use Nadex. You can also use this strategy to help you in your Forex trading. Hey, you guys, let me stop yapping. Let me stop talking. Without further ado, let's get into the video.
Strategize, then we capitalize on what we see. Wanna go to Pittville? Come join the Pip Academy and learn the Pip drill. Let's take the trip to Pittville.
All right, you guys, so the first thing we're going to do is start by talking about FUs, okay? So FUs are candles of pure manipulation, which are how the banks actually get into the market, okay? And so some of you might ask yourself, what exactly does FU stand for? So when you think about it, it's pretty much the bank telling you, F you, I'm going to manipulate you, take your money when I decide to get into the market. Okay, so now looking at this that's on the charts, we have two different type of FUs. We have full FUs and we have attempted FUs. And I'll break this down and explain exactly how to read a FU and what constitute the full from the attempteds. Okay, so now looking at this first FU pattern here. Okay, so now FUs consist of two candles, as you can see. Now, when we think about candles, there is liquidity on both sides of a candle. You got liquidity at the top and you have liquidity at the bottom. Now, what constitutes a FU is when the second candle takes liquidity on one side and close on the other side. Now, the difference between a full and an attempted FU, a full FU has to take liquidity on one side and close below or above the body on the opposite side. Okay, so if we look at this candle, we can see manipulation was taken, liquidity was taken here, and it closed below the body, and it closed below the body of candle one. If we look at this one, this is a FU to the upside. We can see that liquidity was taken here. Okay. Go ahead and grab this here. We can see liquidity was taken here. Okay. And we can see that, oh crap. Let me grab this one. We can see that there's liquidity on this side. However, we still closed above the body of candle one. Okay, so not necessarily that it has to close above the wick, but it closed above the body. So this is still considered as a full FU. It took liquidity on one side, closed above the body on the other side. Now, attempted FUs are slightly different. Okay, so if we notice here, this is an attempted FU to the downside. It took liquidity on one side, however, it did not close below the body on the opposite side. Okay, we can see that it closed above the body. So this is an attempted FU. as the same goes true for the other side. We can see it took liquidity on one side and it did not necessarily close above the body on the other side. Okay, so now you understand the difference between full FUs and attempted FUs. Full FUs, to recap, will take liquidity on one side, close below the body on the opposite side. Take liquidity on one side, close above the body on one side. Attempted FUs are slightly the opposite, like we were saying. It won't close below or above the body on the other side. All right, you guys, now that you know what attempted and full FUs are, let's look at some examples in the live market, okay? Now, one thing I want you guys to understand is we typically want to look for FUs on your daily and 4-hour time frames. And so we want to search for them at your peaks and valleys on your market structure. That's the tops and the bottoms, okay? Because this is where the banks typically get in and where they establish their positions and they do the most manipulation, all right? So let's take a look at this, all right? So as we can see in this example right here, this is a full FU because price took liquidity on one side, closed above the body on the other, okay? There's no position here, but if we come here, we can see this is a full FU to the downside. Price took liquidity on one side, closed below the body on the opposite side. Okay, we don't have one here. But if we come to this area here, this is an attempted FU. Price took liquidity on one side and it failed to close below the body on the opposite side. Okay. Here is a full FU, candle 1 and candle 2. Price took liquidity on one side, closed above the body on the opposite side. And let's look at this last one here. This is also a full FU. Price took liquidity on one side and closed below the body on the opposite side. Okay? All right, you guys, so now we're on a daily time frame and we're still on the S&P 500. And I'm going to explain to you guys how we can mark up our FU zones. And so what we want to do, we want to focus on the daily and also the 4-hour time frames when we're marking up our zones for FUs. So as we can see right here, we have a full FU with candle 1 and candle 2. We can see liquidity was taken on one side and price closed above the body on this side. So the way that you actually construct your zones, you have to take it from the liquidity point and the body of candle 2. So you want to take it from the lowest liquidity point of candle 1 up to the body. And what I mean by that is we'll come here from the bottom of this candle, come up to the body here, and that will be considered your zone. We want to do it according to candle 2. So this here, since we're on a daily time frame, would be daily FU to the upside. Okay, so this is our FU zone in this area here. So let's look and see if we can find some other ones. Okay, so if we look at this, let's just say price was not at this point here, and we can look at liquidity here and take it to the body here, move it over, and we could say this area here is a daily attempted FU to the downside. Okay. You know what? Let's copy this. FU red. There we go. There we go. Okay. So that's attempted FU to the downside. Let's find another one we can mark up. This one here. It's extremely small, but it's still valid. Take it from the liquidity point here. We want to move it over. Daily FU to the downside, okay? And I'm just going through, just marking up zones, not necessarily, taking in consideration what's on the right side, but I'm just showing you guys how to mark up zones. So here's another one. From here up to here. Daily FU to the upside. let's change this here. Okay. So now you know how to mark up your zones, okay? And so typically we want to do this on our daily and our 4-hour time frame. All right, you guys, so I'm gonna walk you through the platform Nadex. And so you can go to nadex.com. And so Nadex is a platform that offers binary options, spread calls, and also what are called knockouts. Knockouts will be what we're going to focus on in this particular video. Now, when you go here, you can set up a free demo. However, the demo only lasts 30 days. Now, that particular period can be extended once you set up a live account and you make your first deposit. And so you can deposit as little as $50, and you can deposit anything above that, whatever you decide to do. Okay. So now let's go ahead and log in. I've already set up my demo account. Now, when you log into the platform, you'll notice that we have an area in which charts can be, and over on the left, we have markets, updates, mobile app, contacts, feedback, and settings, and all of that kind of thing, okay? You'll notice that we have binary options, call spreads, and knockouts. Knockouts will be the area in which we will focus on, and we'll talk about binary options in another video. Okay. When you click on knockouts, you'll notice that you have 3 options. You have indices, which are inclusive of your US 500, which is your S&P. You have NAS 100, and you also have US 30, and you also have some US small caps as well. Okay. If we go back to our knockouts, you also have Forex pairs as well. So you have not all of them, but you have, primarily some of the main players, if you will, within knockouts that you can actually trade from. Okay, so let's go back over to the indices. Indices are one of the favorites that I actually like to do, specifically the S&P 500. Now, when you click on any contract, this is Forex included, you are presented with 4 contracts. And if you click on these contracts, you'll notice that each contract has some blue bars, which represents your ceiling and your floor, almost like support and resistance. Each contract has a different ceiling and floor. So if I click on this one here, you can notice that your contract brackets will move. If I click on this one, and so on and so forth. Okay. So now the idea with this is to buy low and sell high. And so I'm going to show you later on in the video how you can utilize your FUs and things like that to correlate with these brackets to get really good sniper entries and things like that. However, when price is close to your brackets, that's where you want to look for opportunities that correlate with your FU zones and things like that. So for example, if I was to click on sell, you'll notice that my risk is around $60, but my potential is about $440. Okay, so you want to make buys or sells when it's close to the brackets. And so you can close out your position at any given time. However, you want to try to, like I said, you want to try to make sales or buys when it's close to the brackets that correlates with the strategy that I'm going to show you guys later on in the video. Okay, and as you can see, when you get the moving or shifting through different contracts, like if I attempted to do a sell here, or let's say a buy or whatever the case, I'm kind of like in the middle of no man's land. As you can see, my risk to reward is not really that great. So like I said, you want to make sure that whatever you're doing, you're close to the brackets and things like that. Like if I took a sell here, my risk will be around $82 and my potential is 422. But if I was to try to take a buy, you can see that, there's no reason for me to do that because that risk to reward is not, nothing that no one would ever really consider. Okay. So now let's go ahead and look at a few in the Forex market. Let's go ahead and look at EU. And the same holds true. You are presented with 4 contracts. So if we click on EU, you can see you have contracts as well that you can actually play between. So let's just say if we were wanting to take a buy, you can see that indices, the price to comparison is vastly different. There's more to make and there's more to risk when you're dealing with indices. So Forex possibly could be, the area that you guys would look at if you're, you don't want to invest a lot of capital, or you're just getting used to it, getting your foot wet and all that type of thing. Okay, you can see if we were to take a buy, we'd be risking 30 some bucks and potentially going for 60. So this is almost like a 1 to 2 type scenario. Okay, so let's go through some other contracts and see what we can potentially look at. So let's just say we were looking at this one here and we decided to do a sell. We can see we'll be risking around $20, shooting for about 80 bucks, which will be somewhere in the ballpark of a 1 to 4 or something like that. Okay, let's look at another one. Let's look at GU. Okay, if we're looking at GU, we can see we got the same type of setup. If I do a buy, that's almost like a 1 to 2 and so on and so forth. So Nadex Knockouts, when you're looking at the gist of it, you're pretty much looking at, basic support and resistance. You got a ceiling, you got a floor, and you want to think about the notion buy high and sell low. All right, you guys, so now we're going to put it all together. We're going to formulate a strategy on how you can start with your FUs and how that can correlate over to your Nadex Knockouts, and how you can formulate an entire strategy to gain an edge in the market when you're trading these Nadex Knockouts. Okay, so now first and foremost, we're going to mark up our charts with only FUs. Okay, so currently we're on the S&P 500. Okay, and we're on the 4-hour time frame. All right, so now as we're looking at this, we want to look for any full FUs and we want to look for any attempted FUs. And the first thing I see, we want to scan from top to bottom, as I see this full FU here. We can see it took manipulation, it took liquidity on one side, and it would dropped below the body on the left side. Okay, so if we remember how to mark up our zones as far as FUs, we want to mark our zone up from candle 1, and we want to go down to the body of the second candle. Okay, we want to make sure that's how we marking up our FUs. So now this one, I'm going to mark this red because this is our bearish FU, and I'm going to say H4 FU to the downside. Okay, so now we can see we have that FU. So now, do we see any relevant FUs on the downside that can possibly push the market to the upside? Okay, so here we can see that we have an FU here. Okay, this area here, but we can see it's already been mitigated, so we don't want to necessarily look at that one. Okay, we don't see any relevant FUs here. The only one that we see that's possibly relevant is this one here, but we can see price actually wicked into it. But let's go ahead and mark it up as though we weren't actually in the market at that particular time. Okay, so remember, we want to take it from the bottom of this wick here into the second candle. Okay, and this is going to be our FU to the upside. Now remember, this is an attempted FU because the body didn't close above the body of candle 1. Okay, so we're going to say attempted FU to the upside, H4. All right, so now let's go back over to Nadex. All right, you guys, so we're on knockouts. Let's go over to the S&P 500. Okay, and we see we have 4 contracts. Now the ideal is to make sure that these contracts are within the range of our FUs. And what I mean by that is we want to make sure, like for example, if I click on any one of these, we want to make sure our FUs are close to either the ceiling or the floor of that particular contract. Okay, so let's look at it. Let's go back over here and let's look at our bearish FU. So if we click on this FU here and we look at our coordinates is 58.15. Okay, so let's copy this and we're going to plot this on the chart. So we can come up here to our pencil and we can do a horizontal line. Okay, So the first line is going to be 58.15, and we're going to mark that red. Okay. The next one is 58.09. Okay. Pencil. Okay. So we can see that in this area here, this is where our FU is here. And one of the things that we want to note is that this FU currently is not within this particular contract. All right. Now, before we click on each contract, we want to make sure that we plot both of our FUs on the charts. Okay. So now let's go to the next one. Let's look at the coordinates. 57, 52, 25. Plot this other one here. I'm gonna make this green. I'm gonna make this one green to indicate our bullish FU. Okay, we're gonna go ahead and put a rectangle in there. That way we can symbolize that as our FU box. Okay, so now we have our FUs plotted. So now let's go through the contracts. So if we click on, let me go ahead and refresh right quick. Let me go to a different pair. And now let me go back to the S&P 500. Okay. So now, as we can see, I'm gonna click on contract one. So contract one is not necessarily showing up, which means that this particular contract has already expired. And what I mean by that is the ceiling or the floor has probably been breached. Okay. Now we're gonna go over to contract two. One of the things that we can see is our bullish FU is within this particular contract. Okay, so let's just say, and we can see that right now we're at, pretty much noon. It's lunchtime right now, but let's just say at the beginning, pre-market and things like that, we started to mark up our charts. Okay, and if we go back to this, let's see where this FU was. So this FU was, 1 in the morning. So we had a lot of time to actually mark this up, to actually catch this move. So let's say we came into Nadex and we decided to plot our FUs on here. So now we can say, okay, we have a FU that's bullish, that's close to our floor. This is ideal. So when price comes down to this area, we can take a buy to possibly ride it all the way up to this area here or wherever price decides to stop. Now, price don't necessarily have to make it to the top in order to make money. Okay, so as you enter a trade, this here possibly can be maybe you probably risk maybe 30 or 40 bucks and your potential is 500. But as price come up to these areas here, you can take your profits as you need be. But each contract expires at the end of the trading day. Okay, so let's go to another contract. So if we click on this contract, we can see this one is still within this next contract. However, the ideal scenario would be to take trades where your FUs are closest to your ceiling and floor. Okay, let's look at this one here. We can see we wouldn't necessarily want to take this because the risk to reward wouldn't be that great. Let's go back up to the top. And we can see this particular contract is not, we don't have any FUs within the parameters of these particular contracts here. Let's just browse through. Okay. So the ideal contract would have been this contract here when price got down to this area here. But let's just see, if we were to take a buy in this area, we can see that our risk will be, in essence, if we were to lose this particular trade where if price came all the way down and wicked us out at the support, we'll lose about $199. But if it got all the way up here, it'll be about $305. So the ideal, like we said, is to buy when it's low and sell when it's high. But the strategy that you can be most successful with is when your FUs correlate with your ceiling and floor within that particular contract. Okay, I hope that makes sense. Hey, you guys, I want to thank you for watching. This is a particular strategy that can help you make money outside of Forex, but you're still correlating the principles and things that you learn. You can encapsulate it all in one strategy, and it can help you be profitable on the other side. Hey, you guys, thank you for watching. I'll see y'all in the next video.
First we strategize, then we capitalize on what we see. Wanna go to Pitville? Come join the Pip Academy and learn the Pip drill. Let's take the trip.